Right, so let's kick off. This session is dedicated to the State of the Market 2024-2025, perhaps a bit beyond. An in-depth market probe from Cirium, Aeroasset and LCI Analytics. They're going to spend a bit longer than normal looking at their perspective on the market, and then we'll take your questions and fit in some discussion around them depending on how time goes. And all the slides from these presentations will be emailed to you. So no fear about capturing all the detail, we'll send that to you. I'm now going to invite each speaker to spend quite a while looking at their assessment of the market. And we're going to start off, I should introduce the speakers. Firstly, Will Sturm, Aeroasset Vice President Sales, Sarah Dhariwal from Cirium, and, of course, Steve Robertson from LCI Analytics. We're going to start with Will. Will, you have the clicker?
I do have the clicker.
And the microphone.
I do have the clicker and the microphone. Okay. Hi, everybody. Thanks for being here today. It's great to see everybody. It's great to be at Heli Investor again this year, and thanks to Al and Louisa for putting this together. We'll jump right in. Just give an overview of the market. As most of you know, Aeroasset's a helicopter broker, but we also report on the market quarterly for both the single and the twins, and we produce an annual report. So these numbers are basically from our Heli Market Trends report. So this initial slide is a state of the market overall review across all weight classes and market segments. So I'll just give you big picture numbers, just big picture takeaways from this, so you can. Again, as Mike said, you can download these slides, and you can also download our report and dig in with more detail. So year on year compared to 2023, right now, retail sales are down about 30%. And again, this is across all weight classes and single and twin aircraft. Supply is up roughly 20%. Retail prices are also up about 14%. However, days on the market or time for aircraft to sell, that's actually reduced somewhat, about 10% down from what it normally is. And the number we talk about a lot that gives us an indicator on health of the market is the absorption rate, or the amount of time it takes for supply that's available to sell. So that we're on, again, overall aggregate numbers on the entire pre-owned helicopter market is 15 months. And to put that in perspective, last year, that's up 6 months from the same time last year. So this time last year, it was a sub 1 year market, which is very active. And now we're at about just under a year and a half. So I can't see very well. I've looked at this slide a few times, but yeah, so you can see, again, this is where we're at. Thanks, Sarah. So this is where we're at this year. Again, you can download this report from Heli Investor. And now I thought we'd break it down a little bit just across asset classes and configurations. So EMS market, it's pretty flat. There hasn't been a major increase or decrease across sales, supply, or absorption rate. The U.S. continues to be buying the majority of aircraft that will be used for EMS operations. About 66% of the aircraft purchased for EMS operations are U.S.-based. EU is after that. Interestingly, pricing in the EMS segment is down about 25%. So I think buyers in that segment are getting a bit more aggressive, and aircraft that are destined to be going to that market segment are just sellers are being a little more flexible. So that's the EMS market. When it comes to utility, volume's up about 15%, but supply has stayed about the same. So is absorption rate. It's a pretty flat market, but the majority of those transactions are actually in the singles. And so it's again another kind of a flat market. But then I thought I'd touch on the VIP segment. There's been a lot of changes here. Sales are down by about a third. Pretty dramatic change from last year. Supply's up about a third. And to give you an idea of where absorption rate is, I mean, last year was like 6 months. It was really, really cranking. And now we're up 11 months, so it's about a year and a half. So a big difference in that. Mainly, I think it's driven, prices are way up. They're about 30% up for VIP machines. And I think that probably has something to do with long OEM times, availability of ships. However, yeah, it's changing. That market's changed quite a bit. And I thought, I don't have a slide on this, but just to give you guys a bigger picture on what we've seen in like the last 5 years. You know, the peak years for pre-owned activity was 21 and 22 after the COVID bubble. But to put 2024 in kind of perspective to those years, we're at about half of the sales volume of what happened in 22 compared to 2024 year to date. And supply is up about 27%. But if you compare, I mean, that was a crazy year, really, really active. If you compare that to 2019, which has been the lowest activity in the last 5 years, supply is down by about 20% and sales are up by about 25%. So I think we're in a pretty healthy market right now. I think prices might be a little bit high on certain pre-owned ships, but sellers are becoming a little more aggressive, and the market's staying dynamic. And with that, Sarah, I will pass it over to you.
Thank you, Will Stern, and we'll hand over to Sarah Dhariwal from Cirium.
Well, thank you very much, and thank you, Mike, for having me on here again this year. Thanks for everybody to turn up. Let's see what we've got. So I've decided to put this slide on first because it gives us some perspective into the fleet sizes of the different segments that we've got. Someone's mentioned earlier today that offshore is not everything. We've got other sectors to consider as well. This is by fleet number, and the two columns to the left, is this the left? Is the left. The business VIP and utility, you'll find a lot of single engine assets in these buckets, if you like. When we move from to EMS, offshore, law enforcement, SAR, that's the sort of bucket that we would call investable assets, if you like. A lot of those are twin-engine aircraft. They perhaps are valued at slightly higher prices. Financing is needed. So if you did this chart by value only, I think that you're going to see these pillars perhaps opposite, where the SAR and the offshore might be the highest value. But I think it's quite interesting to see how this has grown over time. Business VIP is obviously doing very well. As I said, there's a lot of single engine assets in that, all the way down to the R66. Utilities generally where aircraft end up perhaps in their second life, if you like. They might work as firefighters or the heavy lifting, pipeline inspections, things like that. So we don't really expect that to see large growth. EMS is probably the one that, is the one that's done, have had the most growth over this time period, but at 3.6% is fairly steady, I'd say. Then we obviously get to offshore. It's had a negative growth of 0.8% in the time period that we're looking at, but now it has plateaued, so it does seem that it's stabilizing. Law enforcement, SAR, also quite limited growth there. So all in all, what we're saying is that for the last 10 years, we've seen a growth rate on average at about 1.6%. Moving forward in the next 10 years, we're expecting that to reduce ever so slightly to about 1.4%. Bear this in mind when I show you the slides about values that I'm going to show in a little bit. But when we look at values, and I know some of you are going to nod off now and say, not again, she's going to go on about definitions, but it is key to understanding what we're going to look at next. So the base value is the underlying economic value of an asset. What we do to get to base value is regress a ton of market value data. We put a line through it and we project it forward and overlay that with some expert opinion. The base value does not fluctuate with short-term fluctuations in the market. We tend to like to keep that quite steady. And we then expect the market value, which is then the spot price, the price that you can reasonably expect the asset to trade as of today. We expect that to oscillate around the base value curve. So what's the point of all of this? Now, I hope you can see it. This is the fleet weighted average market to base value ratio by size category. The white thicker line in the middle is your base value, that's at 100%. And you can see that most of the assets actually has been under that base value curve for quite some time. The exception to that is the medium singles. This does not necessarily mean that they've increased in value or seen great value increases over time, but they have outperformed its economic forecast. You can really see them taking speed around 2020, which is actually coinciding with COVID. It's smaller assets. They cost about $1.5 million, $2 million. They don't require a great deal of financing, and they're very popular and has found a secondary life in that utility market. And that's, I think, the reason why they've gone quite strongly. This is the bucket where I think Olivier was saying he's found his sweet spot, and it seems like quite a good place to be. Never mind that you have to churn quite a lot of assets to be in that space. Moving into the twins, and on the opposite end of the scale, unsurprisingly, we got the S92. That has really suffered against forecast because of the challenges that we've seen in the offshore market. In 2021, you'll see a bit of a tick up there, but that was actually due to a base value impairment rather than the assets seeing a big tick up in its value. But even though we impaired it at that point, it continued to fall. The medium twins, I want to point out, also includes things like the 365, the S76, and the S76 is also an aircraft that didn't quite perform to predicted forecast because of the challenges that aircraft encountered during the downturn. Now, when we looked at this in the office, and I looked at this with the fixed wing guys, they looked at me and they said, 10 years? Is that normal for a cycle in the helicopter market? And I said, no, absolutely it isn't. And it could be argued that we should perhaps have adjusted these in sort of 18, 19. But at that point, we actually did see some green shoots. We did talk about seaweed, I think. I think we penned that phrase with Clark back in 2019. We saw something growing under the surface, and we wasn't quite sure what it was. But there was something. But then COVID hit, and it sort of went back into disrepair and sort of a static market. I think the other thing that I want to point out with this slide, which is really interesting, is that the base value curve will depend on where you set the starting point. So in our base value curves, we inflate them every year at the conservative rate, but we do inflate them. We then have to look at the OEM's ability to escalate the pricing from there and then balance that and see what we think. And we've been very conservative with that. But when we look at the regressions that we look at today, we can see that it's almost like the industry has frozen for the last 10 years. So if you look at the 139, for an example, back in 2014, a new 139 was worth, in offshore configuration, was worth about, say, 15, 16 million. Now think about what you pay for that asset today, 10 years later in 2024. You still pay about 15 to 16 million, depending on what the configuration you've got is, which means that if you CPI adjust those data points, it's almost like the pricing has actually done the opposite of going up. So these are some of the studies that we do internally, and I just wanted to present that to you as food for thought. And I think now when we've started seeing the market having an upcycle again, I think it's worth bearing in mind that we're not coming back to the same place that we left off. A lot of things have happened, and with that, it might well be time to recalibrate those base values.
Not going back, Sarah Darrell. Thank you very much for that assessment. We now move on to, of course, Steve Robertson, LCI Analytics. Please, Steve.
Thank you, Mike. Thank you for the opportunity to participate.
Go through them. I've got a few extra.
You got some extra?
Just if we got bored.
So, look, thank you for the opportunity to participate in this session. My background's in economics and computing, and spent quite a bit of time looking at the aviation sector and the offshore sector over the last 20 years. And one of the things that we always thought was quite difficult in this market was actually measuring demand and measuring the balance between supply and demand, because that's obviously critical when it comes to utilization of assets and pricing, amongst other things. One of the things that we track is the weekly number of flights. So shown on the screen here is the weekly number of offshore flights for super medium types and for the S92. Obviously, we saw a big downturn in COVID in the number of aircraft flying. I thought David, in the EMS session earlier, did a great explanation of why we're not using the same number of helicopters that we were back in 2013, 2014. The usage has changed. But as demand has come back, oil prices have increased. The number of offshore field developments is increasing. We're seeing tens of billions of dollars going into new offshore developments every year. And we're seeing that activity is trending upwards. What's really been a challenge for this industry over the last down cycle has been the overhang of excess capacity, particularly in the heavy segment. Obviously, with the number of heavies taken out after 2016, but we found that in the bottom of the downturn, we had getting on for 40 unused S92s, which was dragging down not just the S92 market, but also the super medium market as well, because it's very difficult to deploy a brand new super medium into the market if you've got someone offering an S92 at very low lease rates. What's happened in a very short period of time, really, since the beginning of 2022, is that we've seen that excess capacity has been contracted. It's been contracted very, very quickly to the extent where we went from 41 unused aircraft to 34 uncontracted to near zero uncontracted aircraft today. So that's been a good news story for both the heavy segment and the super medium segment. It's been a very difficult story for the helicopter operators, because they found, sorry, not the helicopter operators, the end users, because the end users have found that the helicopter operators have at times had to turn around and say to them, look, we don't have any spare aircraft to increase our flying activity, and in fact, next month actually we might not have an aircraft available due to supply chain issues. But this improvement in the contracted fleet has brought with it its own challenges. Obviously, if you've got lessors going to MRO companies and saying, hey, we've got a shed full of S92s in Humberside, how quickly can you get them back into the market? That's a headache for MROs when you've got a lot of demand coming from other sectors, such as the military as well. But overall, this has been a good news story for everybody. Lease rates have increased dramatically for S92s by as much as 50% or more. And the monthly standing charges that helicopter operators are able to achieve for their aircraft has increased dramatically as well, which we spoke a little bit about last year. Excuse me. On the supply chain, this probably looks like some bizarre avant-garde art or something, but what this actually is a number of days the aircraft are in base maintenance for each major base maintenance activity. So we measure this by looking at the combination of the data, looking at the gaps in the flying patterns, and then supplementing that with primary research, simply put, speaking to people to understand what the aircraft are doing. 2020 values there, I would suggest, are typical values for base maintenance. some aircraft can go through base maintenance quite quickly, 20 days, but usually a month would be typical. And over the last 2 years, we've seen that supply chain issues have stretched that out to the point where for some aircraft types, they're in base maintenance for twice as long as they were before. So that's obviously a challenge for helicopter operators. The issue, I think, has been quite difficult for the OEMs. You know, they've faced supply chain challenges across a number of different aircraft parts. I know most OEMs have had to intervene in the supply chain one way or the other, either investing in new equipment, people, training, but they're finding that it's very much a whack-a-mole situation, whereas they fix one problem, another one appears, and we've seen a number of types have had some quite well-publicized issues over the last 2 years. We continue to track this because obviously we want to know if things are getting worse, if things are getting better. I think the trend so far in 2024 is that things are not getting materially worse. We hear from the OEMs that some of their supply chain issues are subsiding, but they have other ones coming forward. I think where we are today is that the market has been buoyed by a rising tide. We've had increased demand, which has absorbed excess capacity. The tightness in the available supply has boosted lease rates, it's boosted standing charges and flying hour rates for operators. And you see this year many more people with a smile on their face than you probably would have done 4 years ago. But that's not to say that all of the issues have gone away. We still see issues in the market around contracting terms. There's still, as has been said in the previous panel, fresh in the mind of many people are some of the Chapter 11s that we had during the prolonged downturn. We've got issues in attracting financiers into this market, as Alan was explaining in the previous panel, and a number of different pain points between OEMs and operators. So I think we're at a point today where we still need to recognize that some of the things that we've been talking about for the last 10 years are actually still with us and still need addressing. There's good reason we haven't seen fleet renewal for the last 10 years, and it's because the market conditions have simply not been able to accommodate it. So where we are today is that we have high contracted utilization, we have lease rate factors that make it sensible to invest in new equipment. But we still need sensible long-term allocation of risk with the end users. We need to attract financiers back into this industry. So that's what I have.
Steve Robertson, thank you very much. Thank you. So please prepare your questions on Slido or put your hand up in the old school style if you like. Make use of the resource here. I want to start off by asking Will how he feels about market fundamentals now compared with a year ago, being down and dirty with helicopter sales. What's your gut feel about fundamentals now compared with last year?
When you say fundamentals, what exactly you?
How the market is viewed, how you view the market based on what you're seeing from individual deals, demand and supply.
Well, what we have seen a big shift in the last year is a change in the models that are most liquid. For the last 3 or 4 years, it's been predominantly 135, 145. Those have really been. In our report, we have what we call the liquidity lineup, which is the most active markets.
What's driving that?
It's sales, time on market, supply. There's basically the 4 factors that I've kind of went through. The main factors: supply, retail sales, time to sell, absorption rate. And traditionally, or at least for the last several years, as you asked, it's been driven by those 2 models mainly. 109s have also been very powerful. In the last year, we've seen a shift to the 429 market's been very active. 407 market's really, really hot. I mean, you can't find a single 407 really just about anywhere, especially late model GX, GXI. The 125 market's really active across all variants, even back to V2s. So there's been a shift in those in what aircraft are really sought after and hard to find. That's not to say that 135s, 145s aren't easier to find, but they used to be some used to be very challenging to find. Immediately would sell, and now there's some that have been on the market.
Okay.
So there's a shift in what aircraft have a higher demand.
Sarah's been nodding her head during all of that. How much do you agree?
A lot. No, I think we can see what you're saying there, Will, in the value chart that I showed, where we have those single engines that have outperformed this economic prediction. And I think that some of that is due to environments and events that requires those aircraft, but some of it is due to supply chain issues as well, where you can't get the new ones fast enough, which we then see presses up the values for the older equipment, and then make the value there not depreciate in the way that you'd expect it to do.
Okay. I see someone is shocked. Are appraisers too conservative, Steve? As a completely independent, impartial observer.
Look, I think it's very, I've got to choose my words carefully. I think we've seen in the, over the cycle that, first of all, the nature of the down cycle over the last 10 years caught everybody by surprise. Previous down cycles, especially in the oil and gas industry, have been short-lived, 1 or 2 years, and then suddenly you've got seven-year down cycle where you weren't seeing many assets moving. So tracking values and ascribing values to markets that are pretty illiquid is, I would imagine, not being an appraiser myself, very difficult to do. I would observe that, we 2 years ago, it was very, very evident and very obvious that the market was coming back very quickly. It was clear that the available capacity was going to be used up in a short period of time, and I think we use the phrase sleepwalking into crisis, which is pretty much exactly what happened in the offshore industry. So I think there was some forward visibility of improvement in the commercial terms in the industry overall. I think about an asset in terms of its earning power. Like I say, we've seen S92 lease rates go from 120, 130,000 a month back in the bad days. Now people are asking 180, 200 plus. So clearly the earning ability of the asset has improved, which to my mind should imply that the valuation of the asset.
Incidentally, you painted a graphic picture of S92s sitting in a shed in Humberside.
Yeah.
How many of those are there? Have they all been redeployed now?
Marston will tell you there were 10, I think, all have been moved out. Likewise, the ones in Poland have all been.
Sarah, what was your take on that conservative question? Are appraisers too conservative?
I think we're always getting accused from being one or the other, I think. An appraiser's role in the industry is to follow the market, not to lead it. Our data is only as good as the data that we collect. So if you think we're too conservative, then I'm very happy to have a chat after this and see where that opinion comes from. Because the way that we see it, we fully 100% stand behind our values. And to say what Steve's been saying, we have seen lease rates coming up, but we haven't necessarily seen as big of a movement on asset values, and part of that is the lack of available finance, I think, and the high inflationary environment that we're in, the uncertainty, and the fact that the lessors hold quite large portion of the sort of medium twin plus fleet these days.
Okay. Will, anything to add on that?
Not really, to be honest.
Okay. All right, well, here is a question for you from Anonymous, probably codenamed Emmanuel. William, great data, thanks. How is the pre-owned market year to date versus the same period pre-COVID 2019?
Anonymous, thank you for such a great question. I actually happen to have that data on hand. Sales are, I did touch on it before, but it's true. If we compare where we're at now compared to 2019, sales volume's up about 15%, and supply is down about 20%. So even after taking into perspective the environment we've been through this post-COVID bubble, it's a really healthy market. Prices are high. That's, I think, one of the things that are holding us back a little bit in terms of increasing volume. No.
Because of lack of OEM supply.
There's a direct correlation there. So if you have long lead times and a demand, there's prices are going to be higher. However, as machines start to become available, positions come up, and you will see that segment slip, and we're seeing that, especially in the VIP segment.
Yeah. Okay. And Steve, you were saying that this tightness of supply is leading to direct improvements in contract terms, length of terms, rates. Can you talk a little more about that, perhaps?
I mean, people don't talk about it too much, but it's been incredibly dramatic. I mean, we talk about cancellation for convenience with oil companies cancelling contracts with helicopter operators, but we've seen the exact opposite as well, where helicopter operators have had a clause in their contract where they can cancel with the oil company and then take the helicopter and deploy it somewhere else where they can earn a much more favourable rate. So it's hard to kind of understate just how dramatic the swing in bargaining power has been really over the last 2.5 years.
In both hemispheres?
Yeah, I mean, well, look, I think the offshore industry is maturing quite well. It's maturing gradually, but we're seeing an acceleration in decommissioning in some of the areas that we've thought of historically as key oil and gas regions. The UK is a great example of that. But the flip side of that is that we're seeing huge amounts of activity in Brazil, dozens of new platforms going in the water. We're seeing frontier areas that we'd really not even thought about 10, 15 years ago, Guyana, Suriname, Namibia.
Yeah.
They're having astonishing exploration successes that will require new production systems, new long-term contracts for helicopters and construction support, further exploration. So, yeah, look, it's not even between hemispheres, but I think you've got a market where, someone mentioned earlier, the need to move a lot of aircraft around, the market where you've got it's splitting between areas where you've got decrease in activity and areas where you've got increase in activity.
Okay, thank you for that. Here's a super simple question for Sarah. What will the value of S92s be in 5 years' time?
Any particular vintage we're talking about? No, I don't actually have those figures in my head, to be perfectly honest, although someone would think that I might, but I think they depreciate. I don't know.
Steve,
do you want to bail me out?
I was going to ask you another question, which is, if you could go back 3 years in time and you had the money available, would you buy an S92?
That's a really interesting question, and at that point I must say potentially, yeah, absolutely, because when the super mediums were introduced, no one really believed in their capacity to even talk about taking over the capacity of 92. And now we are seeing the super mediums slowly but surely chipping away at the 92. As we stand today, in that heavy space, super medium S92, the super medium got a 30% market share, which means that the S92 has lost about 20% since 2015, if I remember my data correctly. So yeah, it is happening, but that's not to say that we don't need the S92. I think everybody in this room will agree we need the capacity of the S92s. But as we've also seen, from the issues that we've had, is that relying too heavily on only one type of a particular capability and capacity, it leaves the industry at risk. So to have more options in that category, I think is a positive thing. And I don't think the super mediums will absorb the 92s fully.
So no pre-owned super mediums yet. Are you looking forward to selling them when they come up?
Absolutely. And they're on the horizon. They'll definitely be there. Yeah.
Well, any particular models that you're favouring?
I think it's going to be interesting to see. I think the 175 is going to have a real footprint in that segment, and that'll be interesting to see. Also, the Leonardo products. It's going to be, definitely an emerging market. And just to touch on 225s, I mean, it's a correlation to the requirement, and it's such a storm of different things that come together. You look at to look at the state of the market now compared to a few years ago, firefighting has really stepped in and has a requirement based on the Camlog exiting, and so those types of segments. I don't know if I would have bought this at 92, but but they're definitely, that segment is like as Sarah said, it's a need, and I think that need is going to increase, and what's going to fill its place.
Are you as excited as Equinor is about the Relentless, the Bell 525 Relentless, and the 10 expressions of interest?
Yeah, I welcome all new technology. It's just a question of putting it into operations. And again, my prism is a few steps down the line of new products.
Sure. Okay, so let's ask Steve the question that's got Steve's name in it. What's your view of heavies, and particularly the H225?
I think where we are today is we have a situation where an oil worker can jump on a Ryanair flight with a 787 MAX, which has killed more people than the de Havilland Comet did, very sadly. But they won't get on a helicopter type which has had its problems, which have been understood, resolved. That's where we are today, and I think it's that union issue with the unions is going to be very difficult, if not impossible, to overcome. The aircraft has been a huge success in other markets. It's working in oil and gas in China. I think never say never. We've got very very tight market at the moment. There's parts of the world where I'm sure they'd be quite happy to operate the H225.
Well, I mean, not everywhere is as discriminating as Northern Europe, is it?
Yeah, look, I think the issue issue between fixed wing and oil and gas is that if you have an airliner incident, there's a whole bunch of people that don't know each other, totally unrelated. In the oil industry, and particularly in Norway and in Scotland, you've got a very small number of towns where people are coming from. So when you have an accident, everybody knows everybody. They see each other at the school gate in the morning, and so it's a very different type of emotional reaction that you get, and very long memories of sadly.
Yes, and we shouldn't never forget, of course, there's a human cost to all these stories. Yeah, Sarah, Relentless 525. You were quite interested in it, weren't you, when we talked last year, or not? What do you think?
I think it's an interesting concept. It's an interesting aircraft. Why not? I think for the super mediums, it took quite a long time, and I think we're sort of seeing that effect with the 160 as well. The community want to see it up in the sky and working for a number of years, because that is when you really find out what the capabilities are for sure. So I think we're going to have to wait and see and assess what it can actually do. What I do think is interesting is having 4 of a heavy type in the market. Can
the market sustain 4?
That is the question. I don't know. And then potentially talking about the H225 as well. And I guess on that question, my view is, unless we really, really need the 225, I'm not convinced that it's going to be accepted back.
Okay. Right. Let's whiz us forward to end of the decade, 2030. How does the market look in 2030 for you? Just thoughts. I mean, it's a long way off, but give us some thoughts. Go on.
It's hard for me to really delve into what that type of market's going to be. I'm being really honest, because I focus so much on what's happening today.
Do you think the VIP sector will have found a traction that it never seems to have got so far? Do you think more people will trust it? Do you think security, convenience, congestion will make it a more popular option than it's been?
Yeah, absolutely. I think we're seeing that right now also. I mean, the VIP segment's just continuing to expand. And whatever technologies are on the horizon or also in the works right now are only going to buoy that.
Yeah, okay. Sarah?
2030?
Yeah, snapshot.
I don't even know what's going to happen tomorrow. So, yeah,
all right, here's an easier
say?
question. Will eVTOLs be a threat or an opportunity within that time frame, do you think?
I think it's going to be a bit longer for the eVTOL concept to establish itself as a commercially viable concept for the masses.
Well, we were reliably told 2024, 2025, weren't we?
Well, apparently we're going to see one flying next month in Paris, right?
Allegedly.
I look forward to that. No, I think it will happen. I just think it's going to take longer. It's a long way to go yet. It's very, very early stages. And I think at that point, it's going to start eating up perhaps, if I was Robinson, I'd look at it. The R22s, the sort of the smaller end of the market. I have a hard time seeing that we're going to have a breakthrough whereby you can take a payload of a medium twin plus
Sure.
helicopter.
Yeah. Steve, you're used to looking longer term. Any particular thoughts? How does the landscape look?
Yeah, look, I think rotorcraft have long economic lives, as we've heard discussed already today. But the end user requirements are changing, particularly in offshore, where there's new, relatively new standards that are being implemented in terms of aircraft types, aircraft equipment. We haven't seen very much fleet renewal in offshore for a decade. We've got a fleet of 1,400, 1,500 aircraft in offshore, of which just over 600 are or could be made sort of R690 compliant. So there's an awful lot of work to be done and a lot of investment that needs to go into the market to replace the aging fleet in offshore. I think in EMS we'll see continued appetite for the latest modern light twins, 145s, 169s. And I think in search and rescue, again, it's going to be a market where you've got an attractive end user, an attractive contract, and you've got huge investment requirements for aircraft that are very complex and very expensive. So, I think on the demand side, I don't see oil and gas going away in the next 10 years, and I see the other sectors as being having a positive underlying growth story.
Okay, thank you. So, relative reasons to be cheerful. That's got to be our last point. A nice upbeat note to end on. I'd like to thank Steve Robertson, LCI Analytics, for those views. Also, Sarah Dhariwal from Sirium, and of course, Will Sturm from Aero Asset. Thank you very much for that.
Thanks, everybody.